Hey, so you might be interested in buying individual stocks, but you are totally confused on what stocks to buy, how much to spend, and what platform to use. So today I'm going to be showing you how I am building a portfolio of stocks and what platform I'm using, how much I'm spending, and how I am picking the stocks that I am putting into this portfolio. Hi everyone, this is the Focus Spender and welcome to my channel. On my channel, I talk about how to get out of debt, how to save more money, and how to invest so that you can grow your net worth and build generational wealth. So a few days ago, one of my cousins texted me and he's like, I bought a stock, my very first stock. And I was like, okay, you bought one stock. That's amazing. And so during the call, I was telling him about this platform that I use. And even though he follows me, he does not know about this platform, which is kind of mind-boggling because I've done so many videos on it. But I was telling him about M1 Finance and how I had recently come up with a new stock portfolio. So if you've watched my other videos, you've seen that I've used M1 Finance in the past. And it has done really, really well. My current portfolio has had gains of 54%. So it's doing extremely well. And I decided that I want to build another portfolio. And the reason why I like M1 Finance is that instead of me just buying one stock or one company, I am building a diversified portfolio. So if I put money into one company and that company starts to do bad, I have money in 7 other companies that might be doing much better so that it balances off any losses that I might be experiencing. What I want to do today is basically just go through this new portfolio that I've built. I've identified 11 different companies that I would like to invest in. I did some research to make sure that there is some long-term gains projected. Some of the companies might be a little bit more riskier, but the gains would be even better. So we can just go ahead and go into my M1 Finance account so that you can see what I'm doing. Okay, as you can see here, I have a portfolio, a current portfolio that has $3,500 in it. I've invested $2,894. I have gains of $732.70. So a return of 54.23%. And that's split between market gains, so the increase in the value of my stocks of $659.65. And then I've earned $73.05 in dividends. I could have done more in dividends, but honestly, I have not really focused on dividend stocks. But that is a way that you can really increase the value of your portfolio, is to focus on stocks that earn dividends. So I've invested in Pfizer, Johnson & Johnson, Nike, Netflix, Microsoft, Target, Apple, Alibaba, Canopy Growth Company, PepsiCo, Disney, AT&T, Home Depot, Costco, and Simon Property Group. So before I add anything, I made a spreadsheet for myself where I captured the name of the stock, the industry that it's in, the market capitalization, the current price, the price per earning ratio, and the dividend. And then I went from there. So just looking at the price of a stock is not enough. It's not enough to say, oh, this stock is $20, let me buy it. This stock is $100, let me buy it. You really have to think about other factors. So I want to explain some of the terms I'm using and how it relates to the stocks that I'll be picking. So the first term is market capitalization. It allows investors to understand the relative size of one company versus another. It measures what a company is worth on the open market, as well as the market's perception of its future prospects, because it reflects what investors are willing to pay for its stocks. So you may hear people talk about small cap, mid cap, large cap. So small cap companies have a market cap of less than 2 billion. Mid cap have a market cap of 2 billion to 10 billion, and large cap is anything over $10 billion. So thinking about whether you should be investing in a small cap, a mid cap, or large cap, the market size really can tell you what stage of a business a company is in. So large cap companies are typically much older and more of a secure investment, meaning that it's less risky. It's a more well-established company. So think of it like that. So price per earning ratio is also known as PE ratio. And I'm just going to go ahead and read the definition. It's the ratio for valuing a company that measures its current share price to its relative per earnings shares. The PE ratio is used by investors and analysts to determine the relative value of a company's shares in an apples-to-apples comparison. A high PE ratio could mean that a company's stock is overvalued, or else that investors are expecting high growth in the future. Companies that have no earnings or that are losing money do not have a PE ratio, since there is nothing to put in the denominator. Dividends are a sum of money paid regularly, typically quarterly or annually, by a company to its shareholders out of its profits. If its company is paying a dividend of $5 and you have 10 shares, then on a quarterly basis or on an annual basis, you're going to get $50. So the first stock that I'm going to be adding is Facebook. Click on add to basket. They have a market cap of $672 billion. That means they're a large cap. They have a large share of the market. They are a large company. They have a 26.6 PE ratio, and they don't give dividends. The next stock that I'm buying is Tesla. I have been late to the Tesla party. They also are an extremely large company. They have a market cap of $567 billion. And when I talked about that really high price per earning ratio, their price per earning ratio is $1,080. So their earnings in comparison to their price are way off, but Tesla is like, the new hot stock, or maybe it's not that new, but it's the hot stock. So I'm trying to get in. It's a little too late to say I'm getting in on the ground floor, but I'm getting in, and I'm clicking add at the bottom. The next stock that I'm adding is Walmart. Everyone is at home and everyone is shopping. Their market cap is $421 billion. Their price per earning ratio is 21.34, so it's reasonable, and they do have a dividend yield of 1.08%. The next stock that I'm buying is United Healthcare. And so if you are in the US, you know that this is a really large health insurance company that many people use. And I didn't come up with this stock pick on my own. I was reading an article and they were talking about 3 different stocks that you really should look into. And so United Healthcare Group popped up. They have a market cap of $332 billion, price per earning ratio of 19.84. And they do have a dividend yield of 1.68%. So the next stock that I'm adding is Exxon. It is an energy company. I was going back and forth between Exxon and BP because when I drive, I do use BP. I don't know why I think the gas is different, but I always use BP when I drive. And so I thought about that, but when I compared the two, this looked like the better opportunity. Their market cap is 176 billion. Price per earning ratio is 53, and they have a dividend yield of 8.08%. So pretty good. And honestly, I was supposed to buy all these stocks last week, and I didn't. And the price, it's up about $1.50 since last week. So it's going in the right direction. The next stock that I'm going to be buying that honestly I have been wavering on, but I think I'm just going to go ahead and do it, is IBM. They have a market cap of 113 billion, price per earning ratio of 14, and a dividend yield of 5%. The next stock will be Peloton. So everyone is at home right now. Everyone is working out. I know so many people that have Peloton bikes. People are that even don't have the bike are still paying for the monthly membership for the classes. And I thought, I really am playing myself. I really need to get in and buy their stock because I'm not about to buy their bike. I just don't have the room, and I have a regular bike that I'm just gonna buy a bike stand for. So because I don't have the room, but I want to get in on the Peloton craze, I am going to be buying stock in Peloton. Market cap is 29.2 billion. PE ratio, as you can see, is really high, 618, and there is no dividend yield. The next stock I'm going to be buying is, and this one I have been going back and forth with, so by the end of this video I might remove it, is Chewy. So Chewy is a company that sells all things pet. So if you have a pet, you know about Chewy already. You might be ordering pet food and pet toys, and honestly, during this corona time that we're living in, so many people have been buying pets. Last week they did have a PE ratio and it was negative 135.22%, but they have a market cap of 6.7 billion and there's no dividend yield. So the next stock I'm going to be buying is another energy company, Sunoco. And the reason why I've been thinking about energy companies is that I know that travel is down, and so the prices for these energy companies are actually way down. And at some point, maybe not this year, maybe not definitely not 2020, but maybe not 2021, but at some point life will go back to the way it was in terms of travel. And when that happens, these energy companies are going to be a lot more profitable than they have in the past. Again, I'm not sure why they're not showing the PE ratio, but last week when I did my initial research, the PE ratio was 17.84. So I will look up to see what it is now, and I'll put it on the screen. And the current market cap is 2.4 billion, and they have a dividend yield of 10.9%, which is really, really good. So I will be getting into Sunoco as well. Okay, so the next company I'm going to be buying stocks in is the Container Store. And I feel kind of funny about buying the Container Store, so TCS, because I actually have stock in the Container Store. But when I bought my stocks in the Container Store a gazillion years ago, the price was way higher and the company started doing bad. But what I've noticed is a lot of people, because we're all home, we're all nesting. Everyone is nesting. If you go to the Container Store right now, you can't find anything because everything is sold out, because everyone is home and they're like, okay, let me reorganize, let me do all these things, including me. And so I started thinking, well, if people are like really buying a lot from the Container Store, I need to look into this and see what I should be buying. I need to look into how the stock is doing. And the stock is actually doing much better than it has been. So the price was really low just 3 months ago. 3 months ago, the price was $3.90. Oh, why didn't I think of this then? And now it's at $9.97. And just a few days ago, it was at $11. So they have a market cap of 504 million. So they are considered a small company, a small cap company. And they have a price per earning ratio of 27.29%, and they do not have a dividend yield. And finally, I wanted to stick to 10. Actually, I wanted to stick to 9, but then I kept seeing other companies that I wanted to buy stocks in. So now this is 10, and I actually picked one more. So I have 11 companies that I'm going to be buying stocks in. And it, again, is focused on pets, because so many people are buying pets and so many people have pets. In fact, my job just asked us if we were interested in buying pet insurance. So these pets aren't going to go anywhere. They are here to stay, and people really want to take care of them. So the next company I'm going to be buying stocks in is a company called Pet Med Express. They are also a small cap company with a market cap of 592 million, price per earning ratio of 19.72%, and a dividend yield of 3.75%. And so I'm going to put that into my basket. Now, the way M1 Finance works is that you have a pie and you have to split it up. Let's keep this easy. Let's say you're investing $1,000. They're going to take that $1,000 and split it up how you tell them to split it up. So with this, and I'm just going to refer to my list. If I'm doing $1,000, I'm going to say 15% goes to Facebook. So that means $150. Tesla, I want 10%, so $100. Walmart, I said 15%. United Healthcare, I said 20%. Exxon, I said, what did I say? 15%. IBM, I said 5%. Peloton, I said 5%. Chewy, I said 3%. Sunoco, I said 6%. The Container Store, I said 3%. And Pet Med, I said 3%. Sorry, 3%. So my pie is completely filled out with all of the stocks that I want to buy. And this pie will be called Corona times, because I am picking it during Corona, and a lot of the things that I'm picking are, a lot of stocks that I'm picking have some relation to Corona, whether, you know, the company is doing really well because of Corona, or maybe they're not doing well because of Corona, but once Corona is over, it should do a lot better. The next thing I'll do offline will be to connect it to my bank and fund it. So I think I'm going to be doing, I haven't decided yet. I'm either going to be doing $500 or $1,000, but whatever the title of this video is, you'll be seeing how much I'm doing. And I'm going to be investing on a weekly basis. I'll be investing, I think, $25 a week. I haven't fully decided, but I'll definitely keep you informed on how this pie is doing with regular updates. If you want to follow this pie, I'm going to leave a link to the pie so that you can actually click on the pie and track it yourself. And then I'll also leave a link to M1 Finance if you want to try M1 Finance. Like I said, I've done tons of videos on them. They're a great company. You can invest for free, and you can diversify your investing. So you don't have to worry about just buying one stock here, one stock there. You can have that well-balanced portfolio where you're picking several stocks and you're deciding how much money, how you want to split up how much you invest. My splits, those are just random numbers. Like for me, I thought, okay, you know, who's the more solid company, the less risky company? I want to do more in them. And I want to, you know, have smaller slices for the more risky companies. But honestly, you could flip it. You could do the more risky companies you could have as a higher percent, where the more stable companies you can do lower, so that you can have that cushion. Really, it just depends on your risk tolerance and what it is you want to do. I hope you enjoyed this video. Please be sure to click share and share it with anyone that you know that might find it helpful. And if you watch this video and you're not ready to invest because your finances are just not where they need to be, please be sure to click on the link below. It's going to say free guide. It's my free guide on letting you know how you can adjust your savings so that you can invest a lot more. I'll talk to you guys later. Thanks. Bye-bye.